Guys, good evening, good evening. Welcome to our webinar tonight. How's everyone doing today? Hello, hello, welcome, welcome. Guys, I just want to make sure that you can hear me well and you can see the screen. We are also live on YouTube for second time today here at Elevating Forex. So let's give it 30 seconds more for everyone to join. Where are you guys watching us from? Come on, just drop some countries here. Let's bring the energy a little bit high. From Belgium, from UK. So two from UK, one from Belgium. Nice. Netherlands, Macedonia. Awesome. Hello, Leon, Macedonia. There is no volume. Somebody said there is no volume. Guys, if you can hear me, just type a quick yes to ensure there is volume. Yes, okay. I love that everyone is supportive here, and slowly we managed to build a nice Sunday community, let's say. It's great, to be honest, because I sent it to Ronald. Sorry for that. Just for everyone, please check the audio settings. So, guys, please make sure if you need to ask anything, use the chat and ask me any questions you may want. Rob said, hi, can hear you loud and clear. Perfect, perfect. So let's start. For people who join us for first time, here it's the weekly market watch, key insight and predictions brought to you by Elevating Forex. And to make sure we are clear, this content is for general information only and is not intended to provide trading or investment advice or personal recommendation. And again, for those who see me for first time, for those who see me for second, third time, I hope I don't get you tired by repeating the same things. My name is Theo. I'm a certified financial technical analyst. I run the Market Minds Mastery Academy. You can find us by searching on Google Market Minds Mastery. It's the website. There we provide private coaching and services to brokers, to prop firms, webinars, and all this stuff, daily market analysis. If you're interested, I hold certificate as a market analyst from a few different associations. I have more than 10 years experience in trading. I prefer currency trading, and I love the currency correlation when it comes to trading. Many people, they know me that I presented webinars with Steve Ninson, with John Bollinger, with Daniel Lacalle, and many more. So, guys, let's dive into the market straight away. Okay, so here we are. Guys, does everyone see the TradingView platform? Do you see the screen, TradingView? Yes or no? Yes, yes. Okay, great. So let's start with the Euro US dollar, and this is the 4-hour time frame. Okay, so what happened actually last week is that we had the non-farm payrolls, and the market the market created a new high, like at this point here. The rejection came for a while, but then bullish engulfing all the way. And the non-farm payrolls really didn't manage to create any push to the downside because the US dollar appeared to be as a weak currency. Okay, so what do we expect from this upcoming week? Well, because the week is trading in 5 days, now we do the weekly expectations. Of course, during the day, our traders, they will find the momentum explosive trading setups. They're going to send it on the groups. Okay, but what do we identify on this for our time frame? It's a solid bullish engulfing order block. For those they know what order blocks means, and the price we do expect that if it's going to bounce, if it's going to touch in this one and bounce upwards, it's going to create a solid support. Also, just a little bit below there is another bullish engulfing. You can keep that. You can mark this on your chart, guys. I do this analysis for you. You can put all these levels on your charts. Don't get confused if I have the moving averages. It's just I have to send, I'm sending market analysis to prop firms and brokers. So everything you see here, it's needed. This is an upward channel. It's needed because the price made this high, higher high and this higher low. But again, I will be focusing more on this bullish engulfing order blocks, because if the price will tap into this one here, then we expect a move to the upside. Now, if you want to learn more about how to, if you want to trade yourself, and if you want to do something beyond the services we offer here at Elevating Forex, then you can definitely contact me and I can teach you how to trade and become a skillful trader, of course. Or if you just need some coaching, I'm more than happy to help you with that. So this is the weekly analysis, or the little bit longest bias for this week we expect on the euro US dollar. Let's check the pound. The Great British Pound, actually, let's just delete this one here, and I will explain you as we're going through. Now, on the Great British Pound, guys, and the US dollar, last week, the market really explosive to the upside. You see the black candles here, very shallow retracements. That means a strong upward move. So what do we expect when the market is moving so strong to the upside? We definitely do expect the swings to be continued, but keep in mind that in Forex market, the currency pairs, usually they retrace, and especially the Great British Pound, usually retrace around the 50% of the Fibonacci level. Now, from where we're going to measure the swing, I highly recommend you, and it's something that I teach to my courses, to use at least, to see at least 2 bearish candles before you draw the Fibonacci from the low at point A to the high at point B to find the retracement. Okay, I don't really like to take it from the one bearish candle because we need some kind of validation, okay, and we need some kind of rule. So from this point here to this point there, 50% Fibonacci, it's around 1.28. It's a nice number that the market can maybe move backwards and potentially bounce to the upside. Roland asks, how do you mark your S1 and S2 weekly support? Guys, that's my job, to mark the support. I'm a certified technical analyst, so we have some rules, and I establish also my own rules. I go on the weekly time frame and I find where it's the current price, the weekly high, the weekly low, or if we have a monthly high and low, I just mark them there, and I give different names. I set up my text with a bunch of different names in order to be able to put out the analysis, okay? But preferably you find the recent weekly low, the recent weekly high, and you mark them as weekly low and high. And why to put the names like not just as one support or as but weekly if it's a weekly high and monthly if it's a monthly high? It's because if the price it's going to come there, even if you are looking at the 15-minute chart or at 1-minute chart or a 4-hour time frame, it's going to bring significant fluctuation. So you need to understand that if you if you mark these weekly and monthly price levels on your chart, guys, it can give you also some intraday opportunities. Okay, it's something really. Calvin asks how to conduct for more mentorship. Okay, guys, just give me 1 second to share with you. It's this one here. Up here it is. Guys, please, you can visit marketmindsmastery.com. Okay, and if you scroll down, where it says here, where it says about us, click here and you can contact us. Okay, put your name, your details here, and I will receive your email. Okay, just to yeah, that's all. So, or if you want, you can send us a message at support@Elevating Forex, and definitely I'm going to contact you from there. Regardless, it's going to be just faster if you do it from Market Mind Mastery, regardless, however you prefer. So let's go back to our analysis. So for the Great British Pound, again, we do expect continuation to the upside. At least that's what we do expect, right? But we want also to see the price retrace a little bit before we continue if we want to trade the 4-hour time frame. Okay. Adam said, mate, I've noticed something about your accent. I'm also Greek. That's what yeah. Yeah. Yes, Greeks, we have this weird accent. While I used to live in Australia, many people, they thought that I was Spanish from my accent. I didn't know why, and then I jumped on the YouTube and I realized why. So, guys, any currency pair you would like to see analysis, please let me know. Next one, USD Canadian dollar. It was a very predictable, as we explained last week for those who were here, that on the weekly time frame, guys, we spotted a bearish engulfing order block. Now, hold on, Theo. Are you telling us that we have to start trading weekly time frames and spot the candles there and blah blah? The answer is no. But by understanding and spotting some significant weekly price actions or areas of imbalances between buyers and sellers, we're going to use them on our advantage as a high probability areas that the price might fluctuate. That's all. Okay, guys? I hope that's clear to everyone. So we drill down to the daily chart and we looked on the left and we spot this area here where that was the origin of the move to the downside. And on the 4-hour time frame, to be honest, I enter in multiple positions for this kind of swing trading, because to be honest, I prefer to trade on the 4-hour and mainly on the 4-hour time frames. So the price at this point, it created another bearish engulfing candle right at this area of, if I zoom out, we're going to see it a bit better, like right at this area of this bearish engulfing weekly block, order block. And of course, after this bearish engulfing here, I was all in to trade, and we enter with a limit order at this point with a stop loss quite high, okay, to avoid any significant fluctuation because the Bank of Canada was reporting their interest rates. And yeah, we took out the profit somewhere there, not all the way down here, of course. Now the price enter into another 4-hour weekly order block. This one here, that one there, that one there. It's a combination. Let's say this, we take this line as the average, and it bounced to the upside. Now, what do we expect to happen if we're going to see a deep retracement? I expected the price to mitigate some of these positions here based on this bearish Marubozu candle, and why not to come all the way and touch this 4-hour new bearish engulfing block, bearish engulfing order block here. So that's how I'm waiting to trade this 4-hour. I'm not gonna just blindly enter tomorrow from this point here. Actually, it's a good point. This is 1.35 and it's a round number, very solid number for the USD CAD. Okay, we will keep an eye on that, but I prefer to trade from resistance. If I'm about to sell, I prefer to do it from resistance. Okay, someone asked for the gold. Definitely, we will have a look at the gold, guys. Next one, USD JPY. Oh my God, the Japanese yen, guys. Last week was so strong in general. And remember, especially with this one here and with the Japanese euro, I remember we explained that on last Sunday's webinar. Remember, guys, we said, just 1 second to clean a little bit okay, let's clean everything from here. Remember, guys, that last week we didn't have this information here. We only saw this candle right here, this up. So it was this bearish engulfing candle, but also it was a double inside candle. So double inside plus bearish engulfing after a strong buying pressure, it indicates that most likely we're going to have some push to the downside. Okay, Tifara asked, do you analyze indices? Absolutely, I analyze indices. Yassas Kalispera from Adriana, hello, welcome. Of course, which indices do you want to analyze? Usually, I will try to go through the S&P 500 because it's a good one, to be honest. The Nasdaq and the US 30 because they have some, I believe they're going to give some good moves for next week. Okay, so we were expecting a move to the downside from here, and on the daily chart on Monday, the price ended with another bearish engulfing. On the 4-hour, guys, it was just selling off so aggressively. I remember that we had this area of support right here. It was somewhere there, and we said we want to sell if the price breaks and close below this support, or if it breaks and close above this resistance. Okay, price broke and closed below this support, and since then it just moved to the downside. Okay, next one, New Zealand US dollar. It's a trade I'm still in this trade from Friday, because looking on the left, I spot this area of this bearish engulfing on the 4-hour time frame, to be honest, this one here, and I was looking to enter short, so I'm still in this trade. And the price on Friday ended with this dodgy candle. It's a kind of equal top. Let's see if it's going to move a little bit to the downside to give us the take profit target. That will be good, at least. Next one, Euro Japanese yen. Last week, again, the price sold off so aggressively. We explained the weekly dodgy candle with a bearish divergence on the weekly time frame. On the 4-hour chart, price started make lower highs and lower lows. Another bearish engulfing candle could be used to enter short. And yeah, the price, it moved lower. Adriana asked about the gold. No, we haven't analyzed it yet, so you didn't miss it. We will analyze it shortly. And Next one, Australian dollar JPY, guys, keep an eye on that one. On the daily chart, the price printed a bearish engulfing candle. We see here that bearish, bullish, bearish, bullish, bearish, another bearish. Now we do expect that the price will continue moving lower, and here it's what traders, they get confused. And again, in order to understand what I'm about to explain now, you need to have some kind of trading, charting experience. I'm not going to say trading experience. I mean, it's about charting. It's about to understand how the market moves, the price moves. So from this point A to this point B, guys, what I will explain now, it's worth paying attention. You're going to see it all the time in front of you. From the point A to point B, price made a higher high, okay? And because this is a daily time frame and we use the daily chart to spot trades on lower time frames, if we understand where the daily is about to bounce, then reverse or not, it gives us a good clue for what to look after, okay? So the 61.8% from this point to that point, if we measure this upward move, this uptrend, it's somewhere here, okay? So I assume that if the price, if I want to trade against the daily chart and I want to trade short trades, my room of opportunity, it's until the price reaches this level here, the 97 Japanese yen on this Australian dollar JPY. After the price come and visit this area here, I don't know what's going to happen. We don't know what's going to happen. Maybe it's going to break and close below. Maybe it's going to bounce up and move upward. We don't know. So we spotted this opportunity. Maybe from Monday, Tuesday, the price will fluctuate a little bit and it comes down and give us some good tradable opportunities until this level here. Okay, so keep an eye on this one. How does it look on the lower time frame? On the 4-hour time frame, guys, it looks like a consolidation that is it want to break pretty much to the downside. If we zoom in a little bit, I've spotted this bearish engulfing order block. It created a new market structure. It means it created a new low at this point here, and we can use it if the price will come a little bit to the upside. We can enter short because it's a fresh move, and we want these fresh moves. If we want the price to retest these new moves, the recent moves, as soon as possible and as fast as possible. Okay, we don't want this order block here to be retested after 2 months. It's going to lose its significance. And again, that's where I see traders, they get caught up and they don't really understand how to trade order blocks, insufficient gaps, or to use the trend lines or liquidity of anything else. Okay, I can help you if you find difficulties with that. I definitely can help you to sort it out. So next one, before we go to the gold, let me tell you about the euro Australian dollar and the pound, mainly Australian dollar. Guys, the euro last week, the European Central Bank kept the rates unchanged, like the Bank of Canada, at 4.5% and 5% respectively. Now on the weekly time frame, we spotted a bearish engulfing on the euro Australian dollar. It means the Australian dollar was stronger than the euro. And if we go down to I like to work my way in trading from the weekly to the 4-hour time frame, because there is no too much of value to interrupt with the daily chart. If you're going to execute on the 4-hour time frame, just the combination of weekly 4 hours, especially if you're a beginner trader, makes it much more efficient, and it doesn't mess around too much with your thinking process. Okay, so on the 4-hour time frame, if we look a little bit on the recent moves, we will see that somewhere here there is a lot of unmitigated orders, and also there is a nice battle between the buyer seller. When you see this 3-candle combination and then the price takes over, it's a clue that if the price soon, it's going to retrace here, it's going to find resistance at this level. Okay, so let's watch this level here around 1.6674, and if this week maybe we're going to find some rejections here to go short. Okay, guys. And also the pound was a strong currency pair, to be honest, last week. So on the weekly chart, not bearish engulfing, but a doji around this resistance. That's the pound Australian dollar weekly. So if we go down to the 4-hour time frame, the price already made this low. You see the price made a higher high, and then that's what we call a non-failure swing, NFS, non-failure swing. That's how we call it in technical analysis. And then the price created a new low here. So this is a strong area of resistance. This is a strong area of resistance because of these all unmitigated areas, price areas. So let's hope if the price will come somewhere around 1.9520 to 40, we can find maybe some tradable opportunities. If the price will never rise up here and it will just continue moving lower, it's just it continue move lower. Okay, it's nothing to do with that. Let's check the gold. Okay, so what happened with this gold? My goodness, from last week, and I remember if you go to them, anyway, from last week, I gave this bullish, bearish, bullish order block on the 4-hour chart as the area that we were waiting the price to tap into and bounced off, but this never happened. The price was taking off and off and off. Imagine this is a 4-hour time frame, and there is the only retracements you see, guys, here. It's during the Asian and the Sydney and Asian session where the trading activity was minimal respect to our traders in Asia and in Australia and in that in that Asian Pacific region, but the activity was so minimal, and that was the only reason the price was just creating this these small candles at the point. Now, what do we expect from next week? Well, gold made all-time high, right? Here it's the all-time high. It broke above this 2144. So we expect more rally, of course, but where it's going to rally to, if as a financial technical analyst, the only way to give a target is to measure the most recent swing, let's say in the opposite way, to find the extension. So somewhere around 2250 or 23, these are good round numbers, to be honest, the 23 especially, 2300 and the 2250, they are the approximate areas that we might gonna see the price to reach. But again, if we go down to the daily chart, for example, you see, guys, it's just an impulse move to the upside, very strong, robust move. We do expect it some kind of retracement. Now I drilled down to the 4-hour time frame and I marked 3 bullish engulfing order blocks, not bearish. That's my mistake. That's bullish engulfing order blocks here. We do expect the price to push higher from this point if it's gonna come and tap into these areas. Okay, that's what we do expect. But other than that, it's just a bullish move. If we go to the hourly time frame, I don't want to bring confusion by looking on the hourly and 15-minute chart because it's not going to be relevant for the whole week. Okay, that's why I stay up to the 4-hour time frame. It's a time frame that you all would like to trade if you are trading a little bit higher time frames. If you trade something beyond the signals our traders they send on a daily basis, and they are really good at that. I credit a lot to them, skillful traders. And next one, US oil. We had a good trades on this 4-hour time frame from this range, the order blocks here. So the price came at this resistance here, and it didn't manage to move a bit higher. But on the 4-hour time frame, this order block was it gave some good moves to the downside. But also remember last week, let me take you to the weekly time frame. Last week, remember, guys, we were looking at this bullish. Don't look at this one. it was this bullish engulfing candle, and we said that on the weekly, it's very similar with what's happening with the euro, Australian dollar. But instead of bearish engulfing, we have bullish engulfing. So this bullish engulfing candle created was the cause to signal that, okay, let's look for mainly buying opportunities on this 4-hour time frame. And where was the buying opportunity? It was from this order block here. Remember, I told you we have this kind of order block, but also we have this kind of order block here, this one here. So when I decided that we enter long, I just shared the distance from this point to that point was somewhere here, okay, with a stop loss below there and a take profit somewhere there at the high points. Now, I'm not showing this trade just to tell you, that was a winning trade. I can show you a bunch of losing trades. I get that. That's not a problem. But it happened, and that was a good winning trade. Okay. Next one. Bitcoin, guys. A question. Sorry, Rob, I didn't see your question earlier. Where's gold supply zone at? And USD/JPY gold. I thought. Please let me know if you understand where is the supply zone on the gold. USD/JPY, Rob, we already analyzed that. So Bitcoin all-time high, 70,000, exactly $70,000. An impressive rally of the Bitcoin, of course. I told you on the last webinar, yes, I'm watching closely this GST USDT and GMT USDT. Okay, it's a nice project that I participate in. It's the 3rd year now. Okay, let's see if it's gonna take over. At some point, it was traded. The GST was traded to $7-8, and yeah, we had a good time, good fun back then. But then it dropped to 1 cent, and that's the beauty of this coin. So with a Bitcoin, what do we expect? Well, guys, on the daily chart, look at this. The price created this enormous bearish engulfing, and we were expecting that it's going to retrace a little bit and mitigate some of these unmitigated areas here and come around 50,000 to 52 to bounce upwards afterwards. But that didn't happen. So the price now took the high of this bearish engulfing, and we expect it to rally further. Now, if you see the size of the candles here, the bullish candles, they become smaller and smaller and smaller. So yeah, maybe the price will come to this 72 before it's going to decline, or maybe it's going to decline from the 70,000 and retrace a little bit back to 65,200. That's the first support I give. The second support I give is the 62,876, and the third support, it's just below the 60,000. Okay, you can also mark this on your chart. And for the last pairs, guys, if you want to see analysis or any other currency pair, please put it on the chart. Nasdaq daily charts, weekly chart, easier. The price didn't rally again. Look at this, guys. Since November last year, now we have March. Since November last year, we have only 3 bearish weekly candles. Every single week was bullish with higher highs and higher lows. Only 3 weeks the price retraced a little bit. It's a very, very strong upward move. And on the 4-hour time frame, yeah, we do expect to see decline. And we start getting these deep retracements on the 4-hour. You see the deep retracements here. So we do expect to see the price to decline and come around 17,500 or 17 and 17. Okay, these are the 2 levels. And the US 500 or the S&P 500, same. This one since October, okay, since November again, 3-4 candles bearish. A doji candle I like from last week, so buyers, they didn't manage to move the prices higher, and usually after doji candles we see kind of enormous move to the downside. So let's see what's going to happen with this one. If you want to trade the 4-hour, there is this nice order block. No, it's not a solid order block yet. We want to see the price to make a low lower than this low here before we assume that this is an order block. Okay, for now, the price is still in an uptrend, and that's only what we see. We have to wait for this market to turn to the downside, to be honest. Okay, try not to rush this one here. Luan, what pairs do you recommend it to focus on the most for next week? I will be keeping an eye, as I said, on the Euro Australian dollar on the 4-hour time frame, because the weekly it was bearish engulfing. I will keep an eye on the euro, on the pound Australian dollar, on the Australian dollar Japanese yen, still on the USD CAD, and yeah, on the New Zealand US dollar as well. I will still be looking for short positions, and on the pound US dollar and euro US dollar for some retracements here as well. And then the US 30 on the weekly chart. Guys, any other currency pair on the weekly chart? The US 30 a little bit more weakened, okay, than the others, but it's like what's going on here on the daily chart? This one, it's a good, actually, on the daily chart, it's been the last 3 trading days, it stays inside of this Tuesday's candle. So if the price will break below this low here, remember me, it's going to do it with a significant volatility. So get ready. If the price will break below, we're going to see it moves at least at the 38,000. Okay. Nicholas, for the Euro CHF and Pound CHF, the currency pairs that I don't usually trade. But saying that doesn't mean we're not going to do analysis for you guys, of course. So the Euro Swissy, why I don't like to trade the Euro Swissy on the 4-hour and perhaps on the daily chart, it's because especially with the current political, economic, geopolitical events, unfortunate events going on in the world, these two, they kind of move alongside. That's pretty much. So the price here, it moves to the upside. That's the weekly chart. It creates higher highs and higher lows, but on a weak pace, and it's going to enter soon on this bearish engulfing and outside weekly order block. So I will, if I was trading this one, I will be prepared to start looking for some short opportunities. Already we see divergences on the MACD, and maybe the price will drop to the downside. Okay. Leo said, CAD CHF, it's even harder to trade. Yeah, now it became a little bit tricky, this one. It was just good at around this area. We spotted that maybe after this moving average interaction will drop. But again, I try to take a long positions around here on the 4-hour time frame, guys, here, and I already had my plan in place, but the price didn't tap into this area yet. I like that it didn't make a new high, so I'm still looking for long positions down here. If you want to mark it on your chart to keep an eye on, but we need to see reversal. Okay, again, you want to see the reversal on the CAD Swissy. iStock asks, which indicators are you using? I use primarily the MACD. All of them by default, I don't change settings. MACD And I also use the RSI. There are times that the MACD shows something that the RSI doesn't, or vice versa. And pretty much I use them for the analysis. I don't use them as entry points. Okay, all indicators are lagging indicators, but all oscillators like the RSI, it's good to spot some divergences, and just you use them better, use them to validate some trade setups rather than the RSI, it's overbought. Like if you go on the Australian dollar, US dollar, and you go on the 4-hour time frame, you're going to tell me, Theo, how do you remember all this stuff? Well, that's my job to remember. Since Thursday, guys, the RSI, it's overbought. Or if you check the gold on the 4-hour time frame, since last Monday, it's overbought. Is it a sell signal? Absolutely not. When the RSI is overbought, that's where you want to find opportunities to buy, not to sell. And again, it's something that I help people to learn effectively how to trade. Not, you need to understand the indicators if you are using them. And I use the ATR, of course, for to calculate how many pips I will use for stop loss when I trade the 4-hour time frames. Again, it's a lot of information that unfortunately I cannot cover them within this 45 length on the webinar. I can stay here for 2 and 3 hours to tell you as much as possible, but we don't want to make it too much for you. Okay, we want to have it in a very joyful and relaxed way so you can enjoy the webinars. Okay. Guys, by the way, I will definitely encourage everyone to give some feedback. You can message us at support@elevatingforex to give us some feedback, what you might want to see more on the webinars, what you believe we can improve. I like to hear your feedback, your comment. If you believe I can add something to show you more, to improve and make it even more interesting, okay, for you, please kindly let us know. But you send us a message at support as Elevating Forex Support. Okay, so guys, I think that's all from me today. I really hope that you enjoy the webinar, you find some value out of it. And here at Elevating Forex, myself and the team, we are dedicated every single week to add as much value as possible to you. We are building a healthy community here with all kind of traders or backgrounds, people they just use our product for trading, the bots and the signals, other people that they want to learn how to trade. So we try to add value to everyone here. Roland asked how to draw trend lines properly according to you. Oh my God, Roland, please send me, contact me on the Market Minds Mastery so I can reply back to you and I can tell you. It's very simple. I just don't want to keep everyone here. Okay. Nick said, thank you, Theo, for sharing us your knowledge. Appreciate your help. You are very welcome. Okay, guys, again, thank you so much. Have a lovely week ahead. Enjoy your week, the trading, of course, and we will be back next Sunday at the same time with more market knowledge and information. So thank you, everyone, and have a lovely night. Bye, guys.